Hello, welcome back to WINFXTRADING YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. If this is your first time of visiting this channel, do your best to subscribe and turn on the bell notification so that you get notified each time I upload a new content, and try to like and refer this channel to your network so that YouTube pushes to a higher level of audience. I don't actually upload content anyhow. I have to look at what traders are passing through, the losses, the failure in the trading community. I sit down, go into research for several period of time, up to a week, up to months, and I come back with answer to those problems. So make sure you stay to the end of this video so that you will actually deploy and appreciate what you are learning from this video. So the topic is block control analysis in Forex synthetic market, and we shall discuss things like continuity, change of trend, reversibility. This is reversibility, okay? Stability studies, line frequency analysis, okay? And then we actually look at what is block, okay? Introduction to block, right? Introduction, okay? Introduction to block analysis, okay? So these are the things we shall be discussing. Now I'm going to start with the schematics of this topic so that I will go to practical charts for real analysis. Take for instance, we have an action that move price from point A to point B, okay? To point B, okay? On reaching point B, the market slows down and creates a loop. So we represent the loop with a circle or ellipse. So we have a loop here. Now the question is, what happens when a loop creates? After the loop has created, two things is going to happen. One, the market will create an output in the direction of the input, so there will be a continuity. So there will be an output action. Let's assume that the length of the input action is I. So the length of the output action is going to be Ki, okay? In most cases, the second, because I said there are two events, two possibilities. The second will be that the output will be in a reverse direction of the input, okay? With length equals to Ki, but negative minus Ki, okay? Now, what is the meaning of all this thing? Okay, see, this loop is what we call block, and it is called control block. This loop, so long the price action is above this loop is a bullish block. It's called bullish block, BBL, bullish block. But if the output action is below this cycle or this ellipse, then it is called bearish block, BB or BBR, bearish block, okay? So that is by the way. So what is the meaning of control? Why do we use the word control instead of just block? So by now you should know the meaning of block. A block is just the region on the price move, the region on the chart where the price movement is in ranging state, where the price ranges, waiting for breakout, either to the upside or to the downside, either to break out with a negative slope or to break out with a positive slope. Okay, that is a block. Now when we now say control block, what control block does is that every block should be a controller. So if the price action is trading above a control block, above a block, then we cannot say that the block is a is a bullish control block, meaning that that market remain bullish or that market is buying so long they have not gone against that block. Okay, so this thing is mostly studied using line frequency chart, and you will appreciate the use of this in stability analysis in the market, right? Because when there is a breakout and the market creates a fake out, we will not say that the breakout is not stable, so the market created a fake out. But when markets create a breakout and the breakout go ahead to create another breakout, we say that the breakout is stable, the market is stable in that breakout direction. And it is control block that will help you to study these stabilities. Okay, so we are now going to the real application of these ideas to study the price movement. Okay, right here we start with a synthetic asset and then we quickly go to forex asset. Right here we need to be on the both the highest time frame and the lower time frame, but the higher time frame will give you instance of what is happening in the market, and the lower time frame will show you various possibility to enter the market. But the higher the time frame, the better the entries and the better the risk reward. Okay, but at this point, if you have been losing money trading, you pretty much want to succeed in this market by all means. If you have been losing money trading, you keep trying this on your own, you lose money. You keep trying on your own, you lose money. Definitely, you have to copy and paste our trading real time, enroll for our courses and mentorship for you to go far in this kind of stuff, right? Right now, I'm going to switch over to line chart. I will be in the monthly time frame. Okay, I'll be in the monthly time frame. So right here we have an action. This is an action that creates. So this is an action that creates. It was a sell action. When we have this action, the market creates a block. So this is a block, right? This is a block. So this is the block. Okay, a block looks like this. Market create an upward action, pull back, creating a normal inverted V and normal V, and they create some slight of output line. Okay, so when we circle this inverted V and V, you form a loop or you form a block. So this is the block we are talking about. Okay, this is a block we are talking about. Okay, you form a block. Okay, if the market moves down and creates a V, inverted V, and then it move down, creates a V, then inverted V with some sort of output, that is what you call a block. That V and inverted V combined together, put in a cycle, is called a block. Okay, so when a block is creating, your own is to study the stability of that block. When you study the stability of a block, you know whether the block is going to create a continuity signal, which a continuity signal is a signal whose direction is equal to the input. So you define your input action. Okay, remember we're actually using the mathematical model to model the input, so that the transfer function is K. That's why this is an action, okay, I, whose magnitude is I, which is an input action, and we now have an output action the input action is pointing downwards, and the value, the magnitude is I. The output action is also pointing downwards, and the magnitude is Ki. So the ratio about the block transfer function TF is equals to the ratio of the output all over the input. You know that the ratio is always equals to K. K can be equal to 1 or less than 1. K can be positive or negative. When K is negative, it is a reversal signal, and when K is positive, it's a continuity signal. Okay? If K is less than 1, it shows that the output signal is weak. Maybe due to the nature of the input, or where such event happen in the price movement. Okay? The conditions of the market when such thing happen matters a lot. Maybe it happened when the trend is about to change, so it just gives us a short-term output, making the K factor so weak so that it becomes less than 1. Okay? K can be greater than 1. That shows a very strong output. Okay? If K is positive, it shows reversal. I'm sorry, continuity. And if K is negative, it shows reversal. I'm not going to go deep into the transfer function of a thing and the slope characteristics of the output signal, but I'll pretty much go deep into stability analysis. Okay? So if you're able to define your block, the first thing, apart from going into stability analysis, the first thing you need to know is that the block becomes a controller. It becomes a control loop. And what makes it a control is so long this block has been defined and it is able to create at least 10% of the full output. 10% of the full output. So when the output line is here, we cannot say that this block is fully defined because it have at least created 10% of the full output. Okay? Or 10% of the input. If the output is at least 10% of the input, then we can say that the block is defined. One thing is for block to be defined, and the other thing is for the block to be stable. A stable block controls a continuity signal, while unstable block controls a reversal signal. Okay? Now, what I'm trying to say is that so long the output action is here, this block is trying to tell you that they are controlling this market to sell. No matter how this market struggles, so long they have not taken out this block, this market remains bearish for that reason. Okay? So there are many types of block. There are major block, there are minor block, there are internal block, there are external blocks. So once you know what block is V and inverted V, so we have another block here. So this block controls a selling market. They controls bear markets, right? Also we are tending to have another block here, right? But what I'm trying to work out here is that is the mathematical base of this block analysis. The transfer function, I'll shortly bring it in because it's necessary, because we really want to make profit, and the profit depends on the output. Because the input is something you observe from a distance, waiting for the market to create a loop so that you can be able to continue like you can just know what is going to happen next, right? So the general rule of thumb is when you see control blocks in a downtrend, always look for selling outputs, and when you see control block in an uptrend, always look for buying output. But at this junction, you need to know what trend is. Whenever the market is making differential swing, it is trending. So if market is making lower highs and lower lows, you can see it in the line chart. The market is making lower lows and lower highs. Just identify just identify a low and a high and see how the market responds to it. So we have a high and then we have a low. So because the market just break this low and create a new low, it created a lower low. So we cannot say that the market is downtrend. Simple. We don't need much stuff to explain trend. Then here we have a low and then we have a high, and the market break the high. So you don't need somebody to teach you again. What you need to say is that the market is what? Uptrend, right? So this is how this thing works. So by now you have understood what trend is. So control block analysis is very, very important. Okay, so how can somebody study the stability of block? So this is a block. I want to study the stability of this block. Why do I want to study the stability of this block? It's because I want to trade the output of that block in such a way that that output does not suddenly change direction against my own direction. So a stable block creates output whose direction is always consistent with your own direction. Like, because a stable block will create a continuity signal, like it will create a continuous or forward signal, like a signal in the direction of the input. While unstable block will create signal whose direction is against the input. Now, what pays is looking for those blocks that will create outputs that have the same direction as the input. So you look for a positive control block. But if a block is not stable and it starts creating a reverse signal, what you need to do is to readjust your decision and wait for the stability of the reverse signal. So when the reverse signal stabilizes, it will still give you what you want. Okay, now right here we have a block, and then this block have already created about 10% of the input. So this is the input. Okay, see, the way I'm teaching this is not the way it is in real chart on real trading, because in most cases about 70% of 40 to 60% of input turn out to become outputs. 70% of outputs turn out to become input. So that when you see market trying to create outputs here, in most cases it automatically change and become an input again. So when the output is changing to become inputs, it is creating confusion. What we want a stabilized event in the market. We want where the input actually become output and not the output to become input. So that is why the stability analysis is going to be very, very crucial here. So when you go to your candlestick domain, that is how you study stability analysis. You want to make sure that a candle closes outside, perfectly closes outside the loop or the block. So we have this candle that, and the polarity of that candle should be in the same polarity with the block. Okay, you must define the polarity of your block. That is the direction, like the sign of your block or the slope of your block. So your block can either be negative or positive, but not neutral. should not be neutral. Don't trade the neutral block. Okay? And what makes a block to have sign is if the market has been broken, has been breaking levels prior to creation of that block. If it is breaking level, what is the direction of those breakouts? That will be the direction of the block. So it's breaking level to the downside, so the direction of the block is bearish or negative slope. The block is negative sloping. So for stability study, we want to see a candle close. We want to see a candle of the same polarity close outside the block, close in the direction of the block. So we want to see a candle close downwards or close below this block. So this candle close below this block. So this is a bearish candle because the block is bearish, right? So because it's close below the block, we will say that the block is not stable. The block is not stable, but that is first order stability. For it to be much more stable, we want another candle of the same polarity as the block to open and close outside the block. So we have this one that open and close outside the block. So this thing, it will stress you because you're gonna have patience for all this stability analysis to be completed. Once it is stable, the next thing is to localize your stop loss. If a block is stable, okay, so we have two sides of the block. Like we have two limits of the, we have extremes of the block. We have the extreme that are like, we have the positive, like we have the high energy side and the low energy. We have the infinity energy side and the zero energy side. This side this side that is above the block, that is against the slope of the block, it is called the zero energy side. Why the side that is in the direction of the slope of that block is called the infinity energy side. You want to put your stop loss within the zero energy side of the block. So you want to put your stop loss here, okay? But you don't want to put your stop loss where there is no swing. So you want to localize a swing. There is a swing here or rejection. So the nearest swing here. So you want to put your stop loss here. And then you want to optimize your risk reward by waiting for price to come and react near this block, so that you want to enter this trade here or here, and they want your stop loss to be fixed here, even though it's very costly, but at the end it's worth it. Okay, so that's cool. That's what we are seeing at this time frame. Let's pretty much check lower time frame and see how this stability analysis work. Okay, so let's be on the 4-hour time frame, and let's switch the line chart. The block you choose matters a lot. Just define a block. Once the block is well defined, that's all. You don't need to consider many. Just all you need is a simple block. Define a block as much as you can. This doesn't mean that this is just a general idea that will make you profit in the market. You need to run other analysis. You need to run structural analysis. You need to run top down analysis. You need to know what you are doing. This thing is just to help you to not miss opportunity, or to remove fear index, to make sure that the fear index, the greed and fear index, does not make you to miss opportunity. You don't want to miss opportunity despite all you know, because you might know a lot of things in the market, yet you cannot catch opportunity at the right time. Okay, so right here we have this is a block for sure. This is a block. Okay, so it must have V and inverted V, right? So this is a block. Then the input to the block was coming like this. This is the input to the block. and the output is coming like this. So this is reverse, this is reversal. Okay, you know, when I was saying that we have reversal, it will be as if I'm playing, but it's real. So this is reversal. Okay, so the next thing is to study the stability. Once it is stable, the market is going to give you something. It's going to give you profit. So we want to see a candle open and close outside this block. So this candle open and close outside, and then we want to see another. Yes, this one open, close. This one close outside, but it does not open outside. Then this one open and close outside. So we need a candle that have the same polarity as the block, because this block is, the output signal of this block is upward. So this block is bullish. Yes, that 10% output, study the direction of that 10% output. It matters a lot. So this block is bullish, right? So now we want to localize our SL. So we put our SL here where there is probability of zero energy. So what is zero energy? Zero energy is when you look at that vicinity where you are trying to place your SL, from the left to the right, there is no candle there. So an example is here, there is no candle within this proximity, within this vicinity. And so we can put our SL here, and then we can enter a buy here without necessarily waiting for market to tap into here. The reason is because we are now at a lower time frame. So if you are waiting for market to type, it will just keep creating output, and then when it's coming back, it's not going to respect this. It's not necessarily going to respect it, because this is just lower time frame. And for you to actually get more insight of what market is doing, you need to run deep analysis involving structural analysis, involving differential season analysis, and pattern analysis. You have to. Okay, so let's check Forex market. Let's open 𝑧/USD. Let's check 𝑧/USD and see how this is going to help. Let's check 𝑧/USD. So right now this is our 4-hour time frame, and then we will be in the line chart. And now we want to define the block. Just select a block that you want to define. Okay, select a block. I'm going to select this block, and make sure you mostly select blocks that are along the trend, the main trend, and not the one that is against the trend. So this block now, the next thing is to study the stability. We want a candle to open and close outside this block, and we want another candle to open and close outside the block. Like we want a candle to open and close outside this block. Simple. Once we get that candle that open and close outside this block, it is now stable. Okay, it is not like this one didn't close, it closed inside, so it's not stable. This one closed inside, not stable. Close inside, close inside, close inside, close inside, it's not stable. Okay, so we should have entered this market here and then localize our SL where there is no candlestick in the vicinity, which is here, from left to the right. So you can put it here. Okay, you can put it here. Okay, because this is lower time frame, you don't need to look for another swing like maybe trying to put it here. No, this is lower time frame, so the market is very sensitive to move, okay, than in the higher time frame. So you can put it here, and then by now, if you enter this market here, basically you would want to enter after the close of this candle. So you entered here, and then you should have caught these moves while you are risking this. So the risk reward is not all that big, but this thing work perfectly. Like this thing work perfectly. So that's what you have here for you on block control analysis. Okay, one thing to remember here is that the block control the market. So long the price have not taken out this block, the market is still buying. The same thing will happen for this block. The market is still buying. Now look at where the market, you know, this is a block. So when you stretch this, price break this block. So this block is no longer bullish, it's now bearish. But when price came up on it and start trading on it, it become bullish. So thank you. Be proactive with us and make sure you are doing the right thing. Bye for now.